the RECM Global Flexible Fund is a rand-denominated worldwide balanced fund that was launched in 2003. Since inception, the fund has delivered a return of 15.5% and is a 1.1 billion rand fund in terms of size. For more, we cross to Cape Town, where Wilhelm Hertzog, portfolio manager at RECM, is standing by. Wilhelm, thanks so much for joining us. Just before we delve into your... Thanks very much. Just before we delve into your fund, I want to chat about this reputation element. I know that you've recently penned an article in this regard, and it follows after the Reputation Institute did a survey of the top 20 companies and found perhaps that reputation wasn't as solid among the top 20 as we would assume.
Yes, that's right. It was a very interesting study, we thought, which, as you mentioned, found that in general, the large South African companies' reputation amongst the public is not fantastic compared to global peers. Now, obviously, the relevance to us and the relevance of reputation to investors is that potentially a company with a poor reputation will have less favorable business prospects in the future. If the public is less favorably disposed towards you as a company, then they may be less inclined to buy your products and services. So it's from that point of view that we found the study quite interesting.
In terms of your investment philosophy, do you invest in companies that you believe are strong in the reputational space?
We are long-term valuation-based investors. So to the extent that reputation impacts what cash flows a business will generate, we do take that into account. But we are first and foremost valuation-based investors. So we will buy an asset and the shares of a company when they're cheap, when they're available at well below fair value. And reputation may or may not come into that equation. Incidentally, I think there's probably a case to be made that companies who have done well historically will be large and well known and therefore have a good reputation in the eyes of the public. And that may not be necessarily indicative of companies that will continue to prosper. I think reversion to the mean is something which we pay a great deal of attention to, and it's not always true that the winners of the past couple of years, which one typically sees when one looks at companies with good reputations, it's not necessarily true that those companies will continue to be the winners for the future. So these are things that we have to take into account. But as I say, we are first and foremost valuation-based investors.
Your fair value, when you say you base it on a fair value, what guides you in this respect as a value investor? What would you look for when you say you look for fair value?
Well, I think it depends on the business. So we basically have three approaches when we try to determine the fair value of a company. So when we assess a company to be of mediocre quality and it's got no real competitive advantages and it's likely to earn returns on its capital that are equal to its cost of capital, then we basically say, what is the replacement cost of this business? So what will it cost you to recreate this business as it is today? That to us then is a fairly good reflection of what its fair value is. Then if it is a sound business with a sustainable competitive advantage and a niche or an area of business protected by a moat that will protect competitors from coming in and eroding away the profits that the business is earning, then we say, okay, what is the earnings that this business generates? And if you capitalize that at an appropriate discount rate, what is the fair value that you arrive at? And then in the third instance, you've got the rare bird, where you've got a fantastic business that also has great growth prospects. So a business that can grow and generate excess returns as it grows, because many businesses can grow, but they often generate returns which are below the cost of capital, and that type of growth doesn't add value. So when you find a business that earns excess returns on capital and that can grow and allocate capital and deploy capital at high incremental rates of return, then you need to start factoring in the value of the future growth and discount that back to today. It becomes a bit more difficult, but it is the type of business that we're all looking for, I guess.
Well, Wilhelm, let's drill down into the Global Flexible Fund. And I've just been looking at your performance, returns since inception. Now, correct me if I'm wrong anywhere here, but inception April 2003, and obviously all the way to April 2012, you've comfortably outperformed CPI plus 8. That's a very good performance.
Yes, that's quite right. Yeah, I mean, you're quite right. We didn't outperform that benchmark. Well, I'd say comfortably by 2% or so, which is very good, we would say. But I think it has been a factor of two things. And the first is that in April 2003, so the South African equity market was very cheap. So we can't shy away from the fact that there's been a big tailwind for this fund since its inception. At the time, South African stocks were very, very cheap, and that definitely helped to drive that outperformance. But nonetheless, we're very happy with the track record of the fund, yes.
In terms of your stock allocation here, I know David wants to jump in, but Sun International, I've got to spend a bit of time on Sun International because it is your top holding effectively in the fund. And we know it hasn't done well. Now I know you're going to turn around to me and say, but actually from a price perspective, it's moving in the right direction for us because we are looking at a longer term element and we are happy with the price that we're paying for Sun International at the moment.
Very much so. We are very happy with the price that the market is offering us on Sun International. It has been the top holding for ECM clients in local funds for some time now, and our clients have been investing in the business for many years, not always as a top holding as it is now. But we do think it's a fantastic business. It's the type of business, and I was speaking a moment ago about businesses that are protected from competitors entering their markets, but it is that type of business. By virtue of owning gaming licenses, it is protected from competition. There are only so many licenses issued in South Africa and the number is finite, and you can't just open a new casino at will. You have to have a license. So that's a fantastic barrier to entry in our mind, and that should allow the business to keep earning returns well above its cost of capital into the future. The fact that gaming businesses have generally struggled over the past few years is something we think will correct over time. We are never good at forecasting how long a cycle will last. I think the gaming cycle certainly has been in a downturn for some time and has sort of been trundling along at fairly low levels for the past couple of years. But that will come right in time. As I say, we don't rate our own ability to forecast when it will come right. But we are fairly certain that it will improve at some point in time. And incidentally, if you look at the numbers reported by Tsogo-san and the like recently, it does seem to be picking up, or gaming revenue does seem to be picking up. So who knows, maybe this is the start of something better for the gaming business. But they definitely have underperformed, and the share prices have reflected that for the last few years.
I can understand your moat in Microsoft. I mean, it's very difficult to change once you're using Microsoft. Where's your moat in Anglo Plats?
Anglo Platinum, what we like about Anglo Platinum and what we think the moat is that it owns probably about 40% of all known platinum reserves. So if you've got unique access or exclusive access to a resource which is for which there's sustainable global industrial demand, we think that's a fantastic business to have. So we think basically the big three platinum miners in South Africa, so Amplats, Impala Platinum and Lonmin, owning such a vast share of global platinum resources, that's a fantastic competitive advantage. No one else, well, there's not much platinum outside of South Africa, maybe Zimbabwe, but we all know the story about Zimbabwe. So owning that resource and having exclusive access to that is a fantastic moat in our mind. So that's what we like about the platinum industry as a whole in South Africa, and then also Anglo Platinum being the largest of the three.
I know most of your top 10. Tell us about WellPoint.
Sorry, could you just repeat which share did you mention?
WellPoint.
WellPoint, is that, are we looking at it correctly?
Okay, WellPoint, sure.
Oh, I thought we had the wrong
WellPoint,
stock.
yes. No, that is quite right. It is WellPoint. Well, WellPoint is one of the largest medical insurers in the US, and with the sort of changing medical regulations and the regulatory environment in the US, where there's lots of uncertainty about how it will all play out for the health insurers, there's been lots of uncertainty, and the market and financial markets typically dislike uncertainty, and uncertainty breeds low prices. Unfortunately, that is how it works in financial markets. If there's a great deal of certainty and a wonderfully rosy future that is clearly defined for the next few years, you can be pretty sure that share prices will reflect that, and more often. So in this case, with uncertainty around medical insurance regulations and how much insurance these businesses will write and what prices they will be able to write them at because of government interference and regulation, that is something which has driven the prices of the shares of many health insurers, including that of WellPoint, to levels which we think are far below intrinsic value. If you take a longer term view and make an assessment of what is a rational and reasonable outcome in the long run. So we think we very much like the price that the share is trading at. We think it's trading well below fair value because of the uncertainty, but that's something that unfortunately goes hand in hand, low prices and uncertainty in many cases.